Good morning, traders and investors. Welcome to Tuesday's edition of Benzinga's Pre-Market Prep, brought to you by Options House. I hope everyone had a good President's Day. Joe, how you doing?
Very well today, Joel. How are you?
Good, good. What did you do on your day off? Did
House of
you
Cards, baby.
House of
House of
Cards?
Cards. And
Yeah,
for the first time ever, on Sunday, I was able to watch True Detective when it aired live instead of waiting until the next day because I didn't have to be up for work. True Detective is an HBO detective show with Woody Harrelson and Matthew McConaughey.
mm-hmm.
And I'm sure you haven't watched it yet, Joel, because you don't watch anything besides sports, right?
That's right.
Yep.
That is correct. I am a sports junkie. Watched a little Olympics, and are you ready? Are you ready for some Olympic trivia?
Yes.
Okay, you know the ice dancing team that won, Charles White and
The ones from Bloomfield.
yes, Merrill Davis. Yeah, well, they went to my daughter's high school, but or Merrill White did. They also were Michigan grads, but that's not the most interesting fact. You know, they're from the Michigan area, correct?
Mm-hmm.
Well, what's his name? Is it Merrill Davis and Charles White, right?
I think so, yeah.
We both get our hair cut by the same person.
Whoa, the same Russian lady?
Exactly, exactly. Olga,
He has
exactly.
like pretty nice hair, right?
Yeah, well, what about me? I mean, come
Uh,
on, friend.
Yeah, actually, can we have Olga's number? Because she's got to do something with that gray mop on your head, Joel.
Yeah, I don't color. I
I
don't.
think all of her efforts went into the figure skating team.
You know what? I didn't have any gray hair until I started working at Benzinga. So
That is not true. Full disclosure, Benzinga does cause gray hair, but Joel was way gray long before that.
Okay. All right. So finally, here we had a day off from the markets. Ultros was in here yesterday. Sorry, buddy. We took the day off while the markets were closed. So even though the futures were trading a little bit, got over the 1840 level in the S&Ps. We've kind of settled back, still trading up a couple bucks here, but they didn't do anything to derail the rally yesterday, right, Dennis?
Nothing derailed the rally. We didn't have the big space rock, the big asteroid hit the Earth, so the market is obviously up because of that. Up 2 points here this morning. 1836 is where we're trading at right now. But does it just seem inevitable that we're going to hit the highs here, Joel?
10 points away, 1846.75. Last few times we came up into this area, we did run into some problems here. So it's not inevitable, but we're certainly only 10 points away. I can't, we don't have anything. What do we have? Anything major coming out this weekend? This is the last weekend of earnings. So unless you get some bad earnings, 10 points away from the high, Dennis. I guess just going with your trend theory, yes, I'll let you bend my arm on that one.
And looking here at gold, it's slightly down here this morning, but like we've been saying, gold just continues to rally here. We've got up to 1330 overnight here, Joel. We have pulled back a little bit off those highs, but gold's still looking strong, and despite the market making new highs.
Right, kind of quiet, down 420. We were talking about just this divergence that we've had. Usually, when you have these slow rallies in the market, the gold market really doesn't respond in kind, but it is rallying here. Really, not finding any fundamental reason. I think I did talk to Luke about it yesterday, and there has been a little bit of turmoil in some European currencies. So perhaps people are doing a little bit of flight to quality, flight to safety. Just keeping an eye on the gold market here. We did take out the high from Friday's session by quite a bit, 1321.50, going up to 1332.40. But we are now below that. We are below Friday's high here and below the close. So I use those levels as good resistance. And if we don't get back over 1318.60 here pretty quickly, we could float down, perhaps test that $1,300 level.
I did lighten up my Newmont position there on Friday. I couldn't take it. I was looking at the multiple highs just above 24, and I cut my position in half up there at 24.10, just because it's obviously been the laggard of the sector with the bad earnings, but it's popped back basically 15% in the last 7 trading sessions. So that investment that I had in Newmont, it's still half there, but the majority of it was short-lived. Also looking here, you want to talk about crude, Joel. We are popping up a little bit on crude here this morning, up again above $100. We're at 178 here right now, trading up 65 cents.
Kind of a quiet rally, nearly identical ranges on Thursday and Friday. The low within 3 cents, 99.40 and 99.43. You had two highs, 100.47 and 100.66. We opened above that, came back down. We had a triple close, folks. I want to point out a real good area. You don't see that in crude very often. Wednesday, Thursday, and Friday's closes were within 7 cents. You popped up on the open and you came down to that area, made a 100.23 low, and then it was off to the races. We hit 101.24, significant level on the upside was the high from last week, and also the highest level we've been this year at 101.38. So crude running into a little bit of resistance.
Merger Tuesday, Merger Tuesday. It feels like a Merger Monday, but it is Merger Tuesday. And we got a
Yeah.
big one here. Forest Laboratories, FRX, being acquired by Activist, which is symbol ACT. It's a cash and stock deal, working out to about, well, if you take out the price, it's 0.3306 ACT plus 2604 in cash. So if we take the current price of ACT, which is popping $25, another one of these when the acquirer and the acquiree both go up. If you take the 215, multiply that by the 0.3306, get about 71 bucks plus another 26 bucks, get you about $97 here on Forest Labs at the current ACT price, but obviously it's going to fluctuate by that 0.3306 ratio up until that point. But Forest Laboratories went out at 71.39, trading up 24 points here on the merger this morning.
Yeah, this one, you were talking about this one. It was kind of a creeper. You said it was popping up in your after hours filters. Someone may
I didn't
have.
notice it on Friday, so I don't want to start bad
Okay.
rumors here, but I've noticed it the last few days. Forest Laboratories seems to keep getting little pops in my after hours filter. And I was looking at it, I was like, I never like it when I see a pharmaceutical company popping up in my after hours filter. I usually, sometimes you see something pop up and you're like, you'll fade it. But the pharmaceuticals, I never like to do that because I like, what if somebody knows something? I'm not saying somebody knew something here, just because I didn't notice it on Friday, and I think I would have noticed it on Friday. But the last few, maybe over the last month, a few times I've been noticing pop up my after hours filter. So I kind of was a little bit concerned, or not so much concerned, but I didn't want to short the thing after hours just in case something like this was to happen. And here we are, Merger Tuesday.
This stock, Force Labs, had that gap up at the beginning of the year. I think it was something, were they breaking up the company or something along those lines? And it gapped up and just kept on going, never came back down and filled the gap. Now you have a merger here. You just have to do your math on this one. Just if you're looking for a parameter on the upside, 97.88 was the pre-session high. Since you've hit that 97.88 level, you've come back to 95.29. But of course, this is all going to be predicated, of the price action of ACT. I don't even think I've ever heard of that stock before. Activists, ordinary pharmaceuticals here popping up as well. That's an
European.
yeah, European taking over our market here. That stock, original pop got up to 223.53. You fall back to the $214 level. So, not hear any talk of any regulatory problems on this. So, a merger likely to go through.
Yeah, and obviously could be some sympathy plays here this morning. So we'll just look at a few of those. I think the one I would look at probably directly MYL, which is I say Milan. Joel says Milan.
Mylan,
Milan, I'm
it's
trying to say.
Mylan. Pharmacin,
Milan,
it's
Milan,
Mylan.
Milan. I like Milan. It sounds so much more
No,
posh.
Milan is spelled Milan.
All right. All right. We'll go with Mylan. Mylan Inc. here is popping up a buck here in sympathy. It's actually
Huh.
bid up 47.35 here. So it's probably one that could be directly going to obviously get a sympathy move here. Lots of other. This could get the whole pharmaceutical sector, like the smaller companies, going, though, again. And they don't even really need to be going because they've already been going. But this is going to keep them going.
Forest Labs really isn't a small company, though, is it? Isn't that a kind of a larger cap pharmaceutical company?
20, probably 25 billion. I'm
Oh,
just
okay.
guessing. Let's
Okay.
go take a look here. Forest Laboratories, the market cap was 19 billion on Friday. So yeah, so
Yeah.
it's probably over 25 billion here now. So decent size, but I'm saying obviously when I'm comparing to the big mega cap. So the mid cap, the smaller cap pharmaceutical sector could definitely get going here. I could fly through a couple other ones too,
Okay.
like something even like Dr. Reddy's RDY, the Canadian one, Valiant Pharmaceuticals VRX. That one could pop. You get another one, ENDP. There's a lot of there's so many. So I mean, you could just go through a lot of them. MYL, I think, is probably the one that I see as the most related here, maybe. But we're
Breaking
any
out,
any
breaking
pharmaceutical.
out, all
Yep.
time high 46.73 was your high back on January 22nd. That's the all time high for the issues. Just getting spotty trades here up at pre market high 47.08. So someone's using the opportunity here, perhaps just some lifts, some offers. Very light volume on the rally for Mylan Labs.
Also reporting earnings here, moving away from the pharmaceuticals for a minute. Coca-Cola. Coca-Cola reports 46 versus 46, which is in line, and that's not good enough here,
No.
folks. They are knocking the stock down 70 cents here in the pre-market, 38.23, closed to 38.93, up against a critical $39 resistance area, and not looking good here on the report.
That's a big move for Coke.
Yes. Yeah, for sure. 70 cents, big move for Coke. We did see the big move from Pepsi, though, too, just 4 or 5 days ago when they reported. Remember, they knocked the stock way down. Actually, I think it might have only been 3 days ago. They've knocked it down 2 consecutive days. They knocked a couple bucks and then another couple bucks off. Pepsi, when it reported, was up at 81.85, and now it's at 78.09. Interesting enough, it's actually popping up 20 cents here in the pre-market, despite the Coke weak earnings.
Okay, we are just skimming on the low here of the pre-market session. 38.20 has been your low, currently trading 38.23. Now, kind of interesting here. You are opening through, or at this point, opening through Friday's low, and you had Thursday's low at 38.13 as well. But I don't think I'd pay attention to those numbers as much as I would as the cluster lows under the $38 level between 37.84 and 37.92. You had three consecutive lows there, the 6th, 7th, and the 10th of February. So that's the major support. I don't think we'll get it much lower than that off the open. Coming back, if you do go into any kind of rally mode, close near the high of the day, so if you can get going north here, probably maybe a nice round number, 38.50 might pose a little bit of resistance, but no major resistance until you get back up to the $39 level.
The concerning thing for me still here is the Pepsi. The Pepsi actually didn't report that bad of numbers, and they whacked it for 2 consecutive days.
Okay.
And here's Coke, and it closed up, and it's surprisingly enough that they were buying this into the report after the Pepsi earnings, and Coke closes on the highs on Friday, basically at its high for the entire month of February. It's surprised that there's so many people were willing to take a bullish stance on this going into the earnings report when you already had Pepsi report, and they're getting punished for it now. So interesting. I mean, if this thing has a rally up in the high 38s, I think there's sellers all over the place that are probably happy to get the hell out. But I don't know if it's going to continue to cascade here or not. I don't see this thing turn around losing $2 today or anything because it is Coke, it is thick. But at the same time, I don't know if they're going to come right and buy this thing right back just because they did not buy the Pepsi back.
Talk about support in Pepsi Cola here. You're going back here. You have to go back into early 2013, and you're going to find multiple lows in the well, I wouldn't say early. April of 2013, you made a low at 78 and a quarter. And then in August and September, you came down into the mid 78s. October, you came down to 78.67 here. So this kind of reminds me of that IBM chart, coming into the
Yeah.
172s, 173s here. So let's see. I mean, this is I mean, for me, I think it's extremely low risk buy here on the $78 level. Let's see if it can hold that. Hit 78.06 on Friday, I believe. Did we get down that low? Wow, what a key level for Pepsi here. Let's keep.
78, absolutely enormous. I agree
Yeah.
with that level. Joel's got to hold that for the Bulls to have a chance here to come back. But we've seen, we saw it, like you said, with IBM. We saw it with Johnson and Johnson. We saw it with Procter and Gamble. We saw it with a lot of big S&P components that they came down, tested the long-term support, and they all held. Now this is coming down off of earnings, not with the overall market. But that being said, you got to respect that long support level, just like you had to respect it in those stocks as well.
Morganomics is pointing out soda is in decline both in emerging and developing markets here. So I don't know, maybe people are opting for these, for these health drinks, or I don't know, or the monster drinks or something. But yeah, soda, it seems to be on the decline.
Well, they're going after growth too. I mean, that's the whole thing. They've been going after growth here for the last couple of years. Anything that's a big growth stock, that's where the money's been cycling into. And this more conservative stuff, where Coke, Pepsi, those are cash cows. They're not really growth stocks anymore. And if you look at the long-term chart, I mean, from the last couple of years, Coke is basically where it was 2 years ago. If you look at the 2-year chart on Pepsi, it's up a little bit, but 2 years ago we were kicking around 65, $70. We're at 78 here now. So Pepsi's done a little bit better than Coke when you put it on the 2-year chart. But at the same time, everybody's jumping into the high growth. That's what they want. And speaking of high growth here, Tesla in the news here again this morning. The stock's making a new all-time high here, 204.15. Rumor is that the CEO Musk had met with the Apple M&A chief. Now, this is big time speculation here. I think just because you have a meeting doesn't mean anything is imminent or even Apple's interested. But if there was a rumor, if there's a rumor, they've hunt it down there, and stock Tesla's popping up $6 here on a little bit of M&A chatter with Apple.
M&A chatter. M&A
I
chatter.
don't think Apple is coming and buying Tesla. I'm not saying. I don't think that's
You don't
happening.
think
But
Tesla's going to buy Apple?
oh, maybe. Who knows at this market?
Oh my gosh, no, that's interesting. I don't know. Who knows? They just might be friends and going out for dinner or
Yeah,
something. 208.28 was the pop that took it up here when initial those rumors came out. So that's the all-time high, falling back here to 203.75. Just recently 203.90. The interesting level to keep an eye on here for Tesla, if you really, if you're waiting for this bull train to keep going, you had three of the last four lows between 201.88 and 202.72. Someone targeting that 202 area. So as long as we stay above there, I think it's good to go to rally on the upside. Coming back on the downside, use that old resistance level as new support.
Are also reporting earnings here. Actually, let's do the technical on Apple just
Yeah, I was
before
just
we
gonna
move
say
on.
that. Do the technical on
Yeah,
it.
we haven't talked about Apple for a couple of days, and you saw this stock here pop back with the whole 500 level held. And it's kind of been straight up for the last week and a half. Ever since we touched 500, there's been really no pullback here. The stock just continues to grind higher. 560 is huge. I mean, we're way out. We're 14 points below that, so that's not coming into play. But I wonder if that's where it's trying to make a march to.
Had the relative strength. Remember when the market was breaking down to the lower 1700, 1732, Apple was just hanging in there at 500. And then for you gap traders, you gap fill traders, and if you were patient, you would have waited because the low the day before earnings was 545.75. We got up to 545.98 on Friday. Filled that entire gap from the earnings. Came all the way back to 50 points, settled a little bit off that level here at 543.99, made a pre-market high of 548. So I'd really like to see the march just continue here through these because actually you had three or four lows right at that 545 area. Kind of like to see it just blow through there, get back above 550 because I think if it hangs up here for a couple days, you might get a little bit of a pullback.
Yeah, that's me. I don't know if your mic's on, Joel. I'm getting a little bit of feedback here, and I can't really hear you. But IEP actually, obviously Icon here is probably happy with the rally, but we didn't mention when we mentioned Forest Laboratories. I bet you Icon's pretty happy about that Forest Laboratories takeover too, because he has a huge position in
Oh, he
that stock
does?
as well.
Yeah?
Yeah, Icon's all over everything, man. He's all over everything. He's making money in so many different ways. And I actually just looked at the IEP stock, and it's popping up here pre-market too. It's up $4 here this morning at 116.50. Bid up at 115. So Icon stock. Look at this chart formation on the IEP too. This is very interesting.
We did just get a bunch of 13Fs in at the end of last week, and the latest 13F from Icon showed let me see here, 30.5 million share stake in Forest Labs. That's about 11%.
11% of the company owns.
Yep.
Man, that guy makes money. He makes money, and they give him the premium on that Icon Enterprises stock. That's the one problem is, like we've said before, the IEP trades at a pretty good premium to the overall book value on the holdings. But man, you look at that stock there, it looks like it's gearing up to go again here, and it is going this morning.
Yeah, it's been wallowing. So they had that blow off high up to like 149, and then came down real hard. But has been in a trading range here for a while. You've had multiple highs here at the 113 area. We have broken through that. We're trading up there by over 3.5 points. Maybe if you're patient, get a pull back here at the 113 level. But could be a major breakout here for IEP off the Force Labs takeover there.
Morganomics is saying that JP Morgan's been getting some love in some of these M&A deals and whatever, where we got an investors conference coming up here, and what are our thoughts on JP Morgan. Like we've been saying, the financials themselves haven't really been participating that well. Goldman Sachs just slightly off the lows. Morgan Stanley just slightly off the lows. Citigroup hasn't bounced back nearly as much. Bank of America has bounced back some. JP Morgan's kind of been the best in breed here in the last week and a half because JP Morgan continues to grind its way north almost every day. And actually, it's just only a couple bucks here off the highs now. So, out of all the financials, JP Morgan has been the outperformer.
Real important level just for today. I'm not sure how much of a longer term opinion you want on this. We had one straight tick up here in the pre market odd lot here, 58.49. But Morganomics, if you're taking a look at this issue, you had a couple highs, 58.10, 58.53. But more importantly here, you're opening into some major resistance here. The 58.44 high on January 21st. I don't know if that was earnings or whatever, but you're up there right now. I like to see it open at that area and just keep busting through here up to 59 and change. If not, here that double top 58.33, 58.44, major resistance to me here. JP Morgan opening into resistance.
You were talking about those 13 Fs there, Brent. I know Dan Loeb, he was taking a position in BlackBerry, wasn't that right? And BBRY actually popping 41 cents here this morning. $9.39 was popping. These all came out pretty much after hours on Friday. Brent, do you
Yep.
have any other highlights there too, like from the 13 Fs, like other big ones
Ooh.
there?
I would have to go look, but I can come back to you with a couple of those.
Yeah, go grab some highlights
For
there. We'll
sure.
talk about this BlackBerry move because Loeb taking a big
Looks
position.
like
Obviously,
10 million shares.
10
Some.
million
Yep.
shares worth. And these are just so so you understand, the 13 Fs are 40 from 45 days ago, correct? So when this
Yeah,
information
right.
comes out, it's actually their positions from 45 days
Yep.
ago. So it's not like they just bought on Friday. They bought these things 45 days
The
ago.
close of the
But
last quarter.
yeah, but it's telling you that obviously BlackBerry and Dan Loeb sees something that he likes in here, and the stock is popping up significantly. I think this is one of your biggest movers off the 13 Fs.
The interesting thing about the BlackBerry is when you Canadians had that the
You
presidents, yeah, you
Canadians.
Canadians had you guys do this all the time too with your stocks. You had the President's Day. Remember, we were closed, and you got released some news or something. They sold a couple phones or whatever, and it popped up, and it
But
just
we were closed, but that doesn't hold this time because we were closed yesterday too. We had Family Day, remember?
right,
So the markets
right.
were closed.
Must
But
have.
you're right, back on like Martin Luther King Day, when you guys have a holiday and we don't, we always seem to jam our stocks a lot higher. Liquidity is lower, and all the Canadian stocks seem to rally when the U.S. stocks have a holiday. So it's a good point, but I guess it wouldn't apply in this case.
Well, but it came all the way back down to the night, where it had to gap and go. It was just interesting that it came all the way back down to that $9 level. Another instance here of filling the gap, and it got right in there, and now you're getting the pop up. It is opening above Friday's high, which was 933. So you need to hold that. After that, you could sneak back up into the $10 level. They did get it higher in the pre-market. Pre-market high for BlackBerry 953. And I don't want to skip over SDRL by J Dot here. Sea Drill Limited ordinary shares from Bermuda here. Here's an oil stock that's been going in the opposite direction of the crude oil
Exactly.
market. Was trading much lower. I have not seen any significant news on this yet, but initially they took it down to 34.52, and you've really have encompassed here a huge rally back up to 35.40. So if you're thinking that it was down before, it was done over a dollar lower. Really have been trying to hold major support at this 35.30 level, multiple lows there. So we'll see what we're opening right into that area. So I will look at that as resistance. If it gets back above 35.30, we're going to have a chance to rally. If not, probably a lot of nervous people that bought the stock there may be looking to dump and get a look at the pre-market low, which is 34.53.
I'm looking at that dividend yield thinking, wow, that is just probably not sustainable. Right now, this thing has a
Oof.
10.59% dividend. I think it was last week, actually. I'm just going to the Benzinga Pro here, and it was not this weekend's Barons, but the weekend before in the Barons, there was a blog saying that this stock is drilling for a dividend cut. So I think that's probably the
No
concern here
worries,
overall
yeah.
is that this, whenever you see a 10% dividend, automatically red flags. This is sustainable, and because obviously 10.5%, if it was sustainable, that'd be a hell of a return in this market. But I gotta think, when you got a 10.5 sitting there, and now they're talking about it in Barron's a week ago, cutting the dividend, that might be on the table here. I have not seen news here this morning too. I don't know if J Dot, if you saw the news go by here, but I haven't seen anything on this either. But I never like stocks when the market's making new highs and stocks are making new lows. Those are probably not the ones you want to be in. I know everybody thinks buy low, sell high. I'm always a big fan of buy high, sell higher, but I don't know if I'd be a fan of this one because the relative strength on this thing is terrible.
Yeah,
Also,
it's definitely has something to do with that dividend here. Actually, there was news out on the 12th, so and then perhaps a little bit of a delayed reaction. Maybe someone went to the Barons stand. You ever do that? You don't look at the date, you buy the wrong Barons. So, oh my God, the CGL going
we
down.
might cut the dividend. We better sell it again this week, just like last week. Waste Management reported earnings and they missed 56 cents versus 60 symbol WM, 3.5 billion versus 3.58 billion, slightly lowering guidance, 230 to 235 for the full year. Estimates are up at 238, a slight raise in the quarterly dividend, so a little bit of good news hidden in there. Not good enough though. Stock went out at 43.67, just ticked down to 42.65, and believe it or not, it actually ticked down at 8:13 this morning to 41 and a half. That's getting a little ridiculous, I think. There's major support in the lower 41s, but I don't know if we're going to see that in the regular session.
It did 41 and a half. Boom. Quickly rebounded up to 42.65. The stock closed out on its high. Had some people leaning the wrong way here. We will use 43.01. That was Friday's low as resistance. Kind of opening up to this 42.50 level. Really been holding in there. 42.31, 42.37, 42.50 here. So opening to a little bit of support if it doesn't hold that. Not a lot until the pre-market low at 41.50. That coincides with the low you had on February 6th at 41.39.
Morganomics popping in here, and he's talking about Canada and the General Dynamics deal there from Friday. They did sign a $12 billion deal with Canada here, and General Dynamics broke out, I believe, to an all-time high. I'm just trying to look at the monthlies. Yeah, 106.35 is where it went out. Right near the highs of the day. The high of the day was 106.45. But General Dynamics, that stock has been flying. A lot of these defense, if you look at the Lockheed Martin and the NOC, all of these stocks have just been absolutely flying this year.
What did I mean? Canada doesn't have an army. I mean, what do they need to
We
do?
have an army. What are you talking
Oh,
about?
you consider horses, people on horses, to be an
You don't
army?
like the Mounties? Those horses are very effective, Joel. Horses
Seriously,
are.
you guys have an army over there?
Well, it's not like the U.S. Armed Forces, but we can do a little bit of fighting too.
I mean,
When we feel we're a very passive country, but
are
when we
you
feel
considering those guys at the toll booths that take money? Is that your first?
well, actually, our guys don't even carry guns, believe it or not. Your side carries guns. We're not allowed to carry guns on our side, so I guess they're not part of the army.
Okay. Wow, that's a big. That General Dynamics has all new time highs for that stock. So Just looking at the end of the day here, it looks like someone had a little opinion here, right at the high. Kind of was bumping up against what is a 106.50 level. Yeah, 106.45. So end of the day, it looks like someone had a little piece to go there, opening above it in the pre-market.
Obviously, the only thing you can look at is the book when you start to see stocks breaking out to new all-time highs. I see 7,500 shares at 107.
We just lost our Skype call, Joel.
Okay. All right. We'll bring Dennis back here real quick. He was talking about 7,500 shares here at 107 in the book here. S&P futures here are peeling back a little bit. We made a low
Ooh, wow.
yeah, we've pulled back here a couple points to 1034 and a half.
We did just have a little bit of data out. I suppose that's probably what's doing it here. Let me get that for you. We just did have Empire Manufacturing for February. It came in at 4.48, and the street was looking for a reading around 8.5. So big miss there in Empire Manufacturing. That's probably why we're seeing the S&P futures tick down about 2.5 or 3 points.
Okay, yeah, that not liking the data here. We had pre-market low at 31.75 here. So we'll just take a quick look. It looks like Joe's computer cut out on him here. So
Yeah, it happens.
yeah, that's had a problem here.
I did compile sort of a nice list of some of the 13F highlights. Dennis was asking me to go over a couple of those, so let me just take you through. We had Buffett, we had Icon out with the 13F, we had Dan Loeb's third point, also David Einhorn's Greenlight Capital, David Tepper's Appaloosa, and of course Bill Ackman. So let me just go through these.
Dennis,
Really.
did we get you back or not?
I'm back.
Oh,
I'm
there he
back. I
is.
guess you guys just hang up on me whenever you feel like it. Didn't like what I was saying. Continue, Brent.
Talking about the Canadian Army.
Yeah.
All right,
Yes.
so let me see here. So Buffett, we got Buffett showing, and I just wanted to make a note here. I feel like these 13Fs were a little bit more important the last couple years. I feel like over the last year or so, a lot of these positions have been kind of getting telegraphed.
Yep, I
Whether
agree.
whether it's the actual fund manager coming out or if it's just kind of a report sort of thing. So that's kind of my disclaimer as I'm going through these. So Buffett's Berkshire showing raise stakes in ExxonMobil, Wells Fargo, and DaVita. Looks like he sold out of Dish Networks. That was news to me, and he also took a new stake in Liberty Global. That was also news to me. Icon showing a 4.73 million share stake in Apple. Also took out a new stake in Hologic. That is Hotel Oscar Lima X-Ray. Icon's Netflix stake cut in half to around 2.66 million shares, and he also sold out of Take Two, that is Tango Tango Whiskey Oscar. Looking at Loeb, that's third point. Let's see, he showed new stakes in Hertz, T-Mobile USA, Dow Chemical, which was rumored, Cheniere Energy, which is LNG. He sold out of Disney, he sold out of 21st Century Fox, Tibco, and also CF Industries. And then Dennis, as you said, he showed a new 10 million share stake in BlackBerry, cut his Yahoo stake in half. Let's see what Einhorn's got here. Einhorn taking new stakes in Anadarko, BP, Chico's, EMC, McDermott, Micron, Penn National Gaming, Sun Edison, Sandy Uniform November, Echo, and took out a new stake in Take Two. And the last one, Appaloosa. David Tepper took out new stakes in Baidu, CBS, Halliburton, and looks like sold out of SanDisk, Bank of America, and Hertz.
Okay, all right. S&P's bounced back here. We got below settlement, not by much. Got down to 34 and change. We got down to 18, I believe 34 and a quarter. Bouncing around here, so settlement becoming an important number here early in the session. We're going to take a quick break, and we're going to talk option spreads, income spreads with Nic Chahine, and he gave us some good tips last week on Apple. He was looking at some credit spreads on that, so we'll see how that worked out for him and see what he has on the radar for this week. We'll be right back with you. Welcome back, traders and investors. Working out the bugs here on the day after President's Day. We have Nic Chahine creating income with credit spreads. Got you up early this morning, Nick. How you doing?
I'm doing great, guys. How are you? I mean, I wake up feeling guilty. I look at the temperature gauges on TV, and it's my goodness, you guys are waking up to 30s and 40s and 20s, and I'm waking up to a nice 60.
Waking
So
up to
I can't
5 more
complain.
inches of snow too here, so it snows every day in Detroit. I think it's ridiculous.
So,
Yeah,
uh,
I can't complain about waking up early. So I'm
uh,
good.
so when we talked to you last week, you were looking at this Apple stock, and you were looking create some income with credit spreads on this one. How did this one work out for you?
It worked out well. It never worked out perfectly. I say that because I have some rules as to whenever I get a good pop in a position, even on credit spreads, which people don't think about as scalping, I have to book it. So, when I have a trade that's got 2 weeks on it, and in a day or two I get 40 or 50 or 60% of the maximum gains, I book it. It's not ideal booking early, but at least it's a profit in the books. So I do that always. So I didn't fight it on the upside, meaning that I went long it with a credit put spread. And last time we mentioned that would be selling a put and buying a put lower, and it's a bullish position because I wanted to stay away from that the put, and that worked out pretty well. Somebody last week, if they sold the Apple calls at 5:45, they made money. The open interest last week told us that it's likely to happen, that the 545 would survive. And indeed, somebody sold them. They made a good penny there. I have a few friends that did that.
Yeah,
Talk
what?
about that open interest there for a minute. We've talked about this on the show a few times in the past, but the way I look at it is when the open interest is really high at a contract position, that can actually kind of block the stock from going higher. Are you looking at it from the same perspective, or how do you look at it?
Exactly, exactly. What I do is I have a couple of spreadsheets and I dump the open interest in them. It gives me a visual um, ruts or speed bumps, like you just mentioned. If I see a high open interest at a certain level around the money, wherever the stock is trading at, then it's likely to create resistance. The assumption there is that market makers or the market, so to speak, wants to hurt as many option holders as possible. So they want to keep them out of the money to have the options expire worthless. That's the way I think about it very easily. So yes, a high open interest usually creates a speed bump or price. It may go through it, but it's going to slow down a little bit. And if it's too big, it may decide to go the other way or
It's
not
all
cross.
it's all kind of relative though too, right, Nick? Because you would look at, if you just take this and if you're a newbie to options, you might look at Apple and say, oh, there's so many contracts there, that looks really high. But you got to kind of look at, what the other contracts are too, and what historical high rates for Apple are as well. Because what's, if you just take an absolute number, it's kind of meaningless. You got to kind of compare it over the series of open interest, correct?
Yes, exactly. I looked the whole thing, both sides, puts and calls, and the total and what it's doing. Also, you got to look at the news. You know, usually whenever I'm always bullish Apple. I mean, how can you mess up a machine like that? It would take I've said it before. It would take a special kind of idiot, right? And he's no idiot. I mean, you might not like him, Tim Cook, but Steve Jobs chose him, so he must know a thing or two about Apple and how to grow it or continue moving this big machine. So in the mid to long term, I'm bullish Apple until things change. But having said that, I always make a joke like, okay, the market's going to punish it because there's no flying car. Well, this morning, we know that there might be, the whisper of them meeting secretly with Elon Musk of Tesla. So, the joke now is almost real. Flying cars, Apple, who knows? So you got to look at the headlines, too. It's not all about open interest. It's just one part of the puzzle.
Okay, so the market's had a nice run up here. We're bumping up against the all-time highs and whatnot. And you had some bullish positions on the pullback. Are you looking for a little pullback here, or are we just going to continue on our merry way through new all-time highs in the index?
Believe it or not, I still have the same thesis as I had at the end of last year. We're going to creep up. There's no doom scenario that I see. We had a potential of one with the jobs report. That had a big potential, negative potential. We passed it. So now we need a new shoe to drop for us to have another doom scenario. Faber was on today. I don't know why we keep giving him news time. Shocker. It's not appropriate, and I'm quoting here, almost, not an opportune time to buy equities. When has he ever said it was? So anyway, the doom scenario needs a new shoe to drop. So I'm not going to short the market outright. We may meander and maybe creep up a little bit and drop down a little bit, but I don't see any giant swings either way. So good time to sell premium. So for example, I'm going to fight Google on the upside with some credit call spread this week, but I'm also hedging my bet by a few smaller debit call spread lower. So it's kind of like financing a little move up
Okay.
in Google.
Can you get more specific than that? I don't know if you want to or not, Nick, but
Sure,
just
I
for
can.
our
I
guys.
can. I'll get. I can. I can. For example, if Google is at 1,205, I would challenge it at 1,230 or 35, for example, with a credit call spread. I'll sell the 1,230 and buy the 1,235 call. With that, I take income. With that income, I buy a debit call spread closer to the money, smaller size, and this way I collect income. I'm hedging my income with, betting against myself smaller and lower, and I can spread time to make the math work out. So I'll sell next week's up on the credit call spreads and buy this week's, which would be cheaper to buy on the debit call spread, which is a bullish position. So sell the bearish position to finance the bullish position. Play with time in order to make the math work out, and you'll have a decent scalp in Google. Move up a little bit, but not reach the higher levels.
And what's your worst case scenario?
On that position like that,
Yes.
the worst case scenario is you get all the money out of your debit call spread for this week, and the other one, let's say Google shoots to 1,300 tomorrow, and the other one gets fully in the money. So it's the wrong way. So the maximum loss, let's say you do 10 contracts and it's a $2.50
Okay.
spread. Your maximum loss is 1,200 on the top line, and your maximum gain on the bottom line is 250 times however many contracts you decide to do.
Okay, so it's even, I mean, because a lot of people, when you think with the way you did that, you're not open ended on the loss side, even though you're short the
No,
higher level coverage
no.
spread because you had lower. No, it makes sense. Just quickly here, we're looking at a stock that's on a lot of support here. Pepsi-Cola is trading on just multi-month lows here at the $78 level. You have that on your radar at all?
No, I mean, I look at it. I don't get a lot of good juicy premiums off of those guys.
Okay.
So, the stock, obviously, the company has excellent management. If you look at the stock, it's just a whole bunch of ups and downs and predictable. So I'm looking at a giant couple of candles recently, which I don't know if a stock of this quality deserves such a thing. They're obviously doing some things right for being a great company, well managed for so many years. But those two giant candles would scare me to jump in, even though they're good support levels. I mean, I'm looking at the 78 all across the last, 12 months back. It had a step up from that price. So now comes the decision: what does it do? Does it revert to the prior year range, or does it stay in this upper range here? So it's a coin flip almost. And if you know me, I'm doing credit spreads. I never invest on coin flip. I like the odds being better than 50-50. That's why I do credit spreads. I like them more than like 90%. And this is so far from 90, it's not even funny for me.
Good.
So I would wait for me. I'm not jumping in.
It sounds like you you like to pick on the big boys then, where you can really grab some premium. Which stocks, like you talked about Google, you talked about Apple. Which other ones do you like picking on there, Nick?
Yep. I do like the big boys. I like the premium. I'm going to miss Google at 1,200, but I'm sure I'll find a way to make it work. But the usual suspects. This week, I'm going to pick on Google and try to challenge it, play chicken with it, like I just mentioned.
Yeah.
Priceline earnings are coming, and he's in beast mode right now. He's hunting 1,300,
Wow.
and I would only play it with Lotto, meaning I'll pick a ridiculous debit spread and I'll buy it for the earnings. I did that with Google, and it paid well when it jumped from 880 to 980. That was but it was just literally a lotto ticket. And after the fact, I'll trade it like I trade Apple, always on the long side with credit put spreads, but not until it reports. LinkedIn is interesting to me right now. I've been telling people to stay out of it because it's legging down, and they really punished it. And the 200 fell. I said, don't touch it if the 200 falls because the 190s come quick. They sure did. I said, don't touch it because below the 190 you got a big chasm. So I'm looking at entry level in LinkedIn. Um, I can probably wait until the 180s, although today it's looking like it's going to be a 187 or so. Last week, 185.73, I think, was the low. So I want to take an entry point in LinkedIn just because it's a street darling, and I don't particularly like the company as using it, but they're doing things right apparently. So a credit put spread in LinkedIn is definitely on the books for this week.
This is a little different from your normal strategies here. I mean, because I mean, if you could argue the stock is kind of with its last earnings play here is under a little bit of pressure. I mean, it looks so the kind of deviating from your or you're not. Is this are you still following this stock on the fundamentals?
Right. I'm still following it because they're being punished, and I'm not jumping in. I have not jumped in. As a matter of fact, I've been saying stay out. Hold on. It's like somebody behind a sandbag saying, "Don't shoot now. Wait until they come within, eyesight." If you're sitting in a bunker, so just wait, wait, wait. Ideally, I want it under 180. Under 180, I'll take a shot with a credit put spread. And when I say that, I'm not taking it at the line. I'm building a buffer below that. I'll take a little less premium, and so the reward to risk is not as sexy. But guess what? I've got a 90-95% chance of success. I'll take a little less premium for that, and I'll sleep well, and I won't worry about a $2, $3 move on me.
Yeah, that's the way. That's the way to do it. Okay, just real quickly, that you mentioned the lotto theory here, and Dennis, likes to talk about that. I mean, you need a special situation for that to go in. Do you see any kind of? I mean, winding down here towards the end of earnings season here. You see any kind of any lotto scenarios coming up?
Yep, Priceline. I mentioned it, and I think that's the only lotto I'm going to play this week. The premiums have gotten so crazy that it's become harder to find a good lotto ticket. So now you got to pay up a little more for the lotto ticket, and I make it simple. I either make it a regular debit spread where I just pick a level that's way out of the money, that's going to cost me a couple $100 and have a nice upside to it. If it goes through that level and up or down, or I find if I want to invest a little more money, just a straight up call or straight up put, depends on where you want to go. And on Priceline, looks everybody's lined up for upside. And I don't usually pretend I'm smarter than the average bear, so I just go with the flow and pick something high up and hope that Priceline delivers and everybody loves it.
So you're
Okay,
just
okay.
buying an outside call and then selling a higher call? Is that what you would be doing? Like
Yeah,
buying like
yeah,
the
you can buy
1350s or something? Yeah.
Yeah, something that's above 1300 by a long shot because if you want to get cheaper, and if it moves up 5%, 6, 7%, then you're in the money. So I know it sounds like wasted money, but either that or you sit it out. I'm not. Again, it's a coin flip. It's not whether they're going to deliver the numbers. It's how the street
That's true.
reacts to the numbers. We
Okay,
can't forecast that.
and then finally, DJ's looking at Target here. Stock's just been under pressure a lot with the credit card snafus. Now coming back down to this $55 level, which was support in 2013, in the middle of the year. How you looking at Target here?
Target, nice place to shop, I hear. But headline stocks always scare me. We're always, the headline can go either way. I keep saying it, coin flips. You said it's gotten down to levels, and that's, I'm looking back like 2 years. It, those are decent entry levels, one would think, but you add in the headline risk. Um, I would take a wait and see because the headlines could be really big. I don't know anything about what happened with their credit cards as far as other
Correct.
than what they said in the news, and so much more can be there. I know of 3 people personally who have had their cards uh, cloned. They were cards in Target, so I really don't know the impact that it's going to have on their earnings or any headlines coming out. So I would find easier money somewhere else. You guys mentioned Goldman Sachs last week. You asked me about Goldman Sachs, and I said I would wait and see, and it sure did nothing since then. But it seems like the whales are jumping in based on these reports this morning into the financials. Goldman Sachs was one of them. I think J.P. Morgan was another one. So maybe retail is not the best place to start picking. Maybe we start looking at financials. So if I had the choice between Target and something else, I would go to something else.
Okay, that sounds like good advice there, and it seems very consistent. With your patterns of investing too. So, all right, well, we'll keep all this under consideration here. Nick, thanks for coming on again on our Tuesday spot. Really enjoy it. Help us get a good look at the market. So we'll let you get back there to your morning coffee in the sunshine, and we'll speak to you next week.
Thanks for the opportunity, guys. I love it.
Okay, thanks,
Thanks, Nick.
Nick.
All right, talk to you later.
Let's do a little morning imbalance update
Okay,
here, there,
sounds good.
Joel, because they came out at 8:30 here, and we're starting to see some movement now off these imbalances. And I don't know what's going on, but every single day last week, General Electric ended up with a big buy imbalance, and Merck ended up with a big sell imbalance. And those are the two that are jumping out to me every morning. And here we are again this week, Tuesday. It's another week, and GE with an absolutely enormous buy imbalance this morning of 562,000 shares, and Merck with a big sell imbalance of 175,000 shares. I do have a short position on a Merck for full disclosure. But General Electric here, let's start with this one because we've got the stock here. It looks like it's up 25 cents here in the pre-market, probably most of that based on that big buy imbalance. I didn't see any news unless it went by here in the last 20 minutes or so on GE. What are your thoughts here on this one this morning? It's opened up right into major resistance.
Yeah, I think you're going to take out that imbalance there, Dennis. I think it's going to go flat here as you sell 500,000 shares. But
I'm going to come in and sell them all.
I like it. I like it here. 25.85 was the high. You're gapping up. There's probably some size in the book at 26. Hasn't been up to 26 in a while here. Last time you traded at the $26 level, traded 25.98. So this one, I mean, if it opens up there that $26 level, I would like it. If it opened up flat, 25.85, I don't think I'd be in love with it.
You just talked me into it, and I just whacked a little bit of 25.99 in the pre-market. Well, I'll keep an eye on it here too. I think it all depends. Obviously, I whacked a very small position, so almost just like a little gamble trade there, 25.99. But I think this could be a scenario where this stock opens up near the highs and possibly gives some back. We saw it, I think, 3 out of 4 days last week. GE actually did open up near the highs and give a little bit back afterwards. The one day was a gap and go too, though, so you do have to be careful. Sometimes they open up high, and sometimes they do continue to go higher. And what about your thoughts on Merck here? Like I said, I do have a small
Oh,
short position
wow.
on in Merck. It's opened down. Last week, this stock kept opening down near the lows almost every day. It opened up and then it would rally. It opened up lower and then it would rally. So you think that scenario could play out here again today? We've got a lot of news in the pharmaceutical sector, but this is big pharma.
Yeah, this big pharma. Opening up major resistance. Three of the last four highs, 55.62 to 55.75. So you got a little bit of it, going your way, going into the resistance. Probably a seller targeting that whole 55.60, 70 area. Trading down, I would not like to see this come up above the close, Dennis. 55.44 mark there. Coming back on the downside, 54.95 low. Market's not real weak. If you could scoop this up ahead of Friday's low, I'd throw something maybe 55.05, 55.10. Not worrying about to see if it gets down to Friday's low because the S&Ps are selling off here a little bit on some of the imbalances, but really can't keep this thing under put it unchanged. We keep bouncing off this 1835 level.
I'll give you a few other highlights here from the imbalances. Obviously, these numbers are going to change. We still have 32 minutes before the open, and some of these are going to get offset, and some of them can flip, and they can do funny things. But right now, I'm looking at a sell imbalance also in Pfizer of 118,000 shares, and it's actually trading down about 14 cents in the pre-market. And interesting enough, Pfizer is kissing up and closed near a big level at $32. I see 355,000 shares in the book at 32. That's going to act like major resistance. And look at all the highs on the chart as traders have been trying to block that, basically trading ahead of that 32 level, and it keeps topping out below 32.
Yeah, opening up into resistance, it usually takes a few times to to get up there. Three of the last four times, though, Dennis, 31.98 to 32 here. So fifth time here could be the charm, but we'll see. Not trading down a little bit in the pre-markets. It's going to have to get some momentum to get back up there above 32. And I'm also noticing on the dailies here that you had some highs right around 31.92, 32 even at the beginning of December as well.
IBM with a small sell imbalance. And this was another one last week. I actually got the open twice, and twice it worked out for me nicely where it opened lower on a day we were flat or up. And here's the same scenario. IBM with a 40,000 share sell imbalance, trading down 50 cents off of that sell imbalance in the pre-market at 183.09, bid at 183.10. I don't know if it's going to open that low or not, but if it does open down in the day and if the market opens higher, I guess the market, like you said, is starting to go flat because there is some major companies with some sell imbalances here. So we were up 3 or 4 points, but now all this information is out, the market is starting to get a little bit weaker.
Yeah, I don't know about fading this one here because you kind of had a large range on Friday. Opened up near the low and rallied up to 184.43. Settled 83.69. You're coming down. I mean, if you're buying this thing here, you really don't have anything to lean on for a little ways here. I mean, Thursday's close 181.84. I know you're not going to ride this thing for a buck and a quarter, and then you had Friday's low at 180.99. So this one, I mean, if you're doing it off the open there, then you better have a quick stop in because there's not a lot of support underneath where we're trading at right now. Pre-market, right on the low at 183.09. I guess if you're banking on a buyer to an even number like 183, not much of a chance. Bunch of odd lots trading in this too, so hard to call this IBM here.
Joel, it's 9 o'clock here,
Okay.
so I guess we're going to go get to our guest. I'm going to go out and get ready for my open as well. I'll pop in the chat with you every once in a while there,
Okay,
though,
sounds
so
good.
we'll get our guest here in a second.
Okay, quick break. Welcome back, traders and investors. We have an author on today. We have Larry Doyle, who's the managing partner at DM Income Advisor, and he is the author of Sense on Sense. Larry, how you doing this morning?
Doing fine. Doing fine. Thanks very much for having me on. We're having some more snow back here outside of New York. So what else is new, right?
Yeah, we're getting a little bit of tired of that white stuff around here, but maybe we'll get a break. Just quickly before we go into your book and your experiences on
Sure.
Wall Street, can you just give us a little bit of your education and your market background?
Sure. I'm a graduate of Holy Cross. Got out of Holy Cross. I guess I'm dating myself here in 1983, so it's hard to believe it's been almost 31 years.
Was Gordy Lockbaum there?
Gordy got out. What did he get out? 5 or 6 years after I did. He was a player.
Yep, sure was.
Yep. So yeah, graduate of Holy Cross, came immediately to Wall Street. Probably didn't appreciate it at the time, but got a great opportunity to go to work for Larry Fink at First Boston. Stayed at First Boston on their mortgage trading desk for 7 years. That was my entree into the mortgage business. I traded mortgages for 15 years and then moved into sales and sales management. After close to 25 years, I left J.P. Morgan. I don't know if it was divine intervention or not. Perhaps it could have been. Left J.P. Morgan in 2006 and have been involved in writing, asset management, and now my own investment management practice. For about the last 5, 6 years.
So all those years on Wall Street, what was the most important lesson you learned?
Well, you know what? There are so many lessons. I mean, the education is enormous. The learning curve is virtually straight up. But when I think back to all the lessons that I learned, specifically in regards to the markets and trading, rule number one always is don't fight the Fed.
Okay, well that's a familiar theme here. So that
I mean, certainly. Aside from that, though, I always wanted to have an appreciation for not fundamentals, technicals, and psychology. And I would see a lot of traders and investors who would focus on one of those at without having an appreciation for another one of those factors. But overriding, don't fight the Fed was always rule number one.
all right, so let's just jump into that then. And so, what's your outlook on the Fed right now? They don't seem to be. They seem to be very accommodating. The statements last week with Janet Yellen, she just kind of wants the tow helicopter Ben, policy there. So you're still bullish at these elevated levels then, if we're not
Well,
fighting the
the
Fed.
issue here becomes, I think if we look at the timing of the taper, I think that certainly coincided with Bernanke's exit of the Fed. I think Ben Bernanke very much wanted to be on record and have as part of his legacy. Okay, I brought you into this grand experiment known as QE, and as part of my record, I started that unwind as well. Not finished, certainly not finished. We're a long way from being finished, but that he started it, so that 30, 40, 50 years from now, when the history books are written, he will have that as part of his legacy. So now the question becomes, how does Miss Yellen continue this tapering process? That's a great unknown, but I think that is ultimately the manner in which she handles the tapering process. To me, is the biggest question facing the markets, not only this year, but probably for the next couple of years.
Yeah, for sure. So tell us about your book, Sense on Sense. I mean, we in our Options House chat room. I mean, we got a lot of conspiracy theorists here, and just tell us about your book.
Well, the Sense on Sense is actually the title of my blog, and I launched that blog in early '09. Simply because there was so much to write about, and I wanted to have a voice. The blog, Sense on Sense, led to the writing of my book. The title of the book is In Bed with Wall Street, and the book just came out a month ago. But really, it goes back to why did I launch the blog, and what did I learn? I having come out of the mortgage space, I understood what happened. Okay, and I think most people understood why this happened. It's massive amount of greed and excessive leverage within mortgages. But what really intrigued me was how did this happen? Meaning specifically, where were the regulators, and how did the industry either get around or engage the regulators? And I was really intrigued by that. And from very early on, I watched the confirmation hearing of Mary Shapiro. And it was like going down into a rabbit hole. Before I knew it, I found myself in the Grand Canyon. And in the process of doing that, I unearthed and exposed what I consider to be significant, scandalous behaviors, ultimately leading to, meaningful corruption within the regulatory system. And that's not just my assessment. Those are the assessments of people whom I engaged, interviewed, who worked both inside the industry as well as within the regulatory system. And it's a fascinating, revealing expose, and I felt ultimately compelled to write it because, to me, these are the greatest risks in the market.
Okay, so in your opinion, if there was, I mean, so this whole financial crisis could have been avoided then. I mean, if there wasn't so much corruption and so much inner workings, then we might have been able to avoid the whole thing.
Well, in my opinion, the senior executives on Wall Street, along with their friends in Washington, exchanged so much money and protection so that it neutralized, if not corrupted, the regulatory system. So ultimately, this is why I call it a conspiracy, is that, perhaps it wasn't this is exactly what we're going to do, but the end result was very much the same, that the regulators failed to uphold. So now we've got this massive debate. Oh, we need more regulation. Others, no, less regulation. in my opinion, what we need are appropriate regulations, which would mean in certain areas more regulation, in other areas less regulation. But what we really need are real regulators. And that's where I think right now the real concern is we don't have real regulators upholding the integrity of the markets.
All right. So, in your opinion, we're not really taking the necessary steps to avoid another crisis.
No, we're not. And I get, why do I maintain that? I personally do not believe that a self-regulatory model, which is largely how Wall Street is regulated, primarily through FINRA, I just don't think that is that really works to protect the interests of investors. And that's not my opinion. That is based upon overwhelming amount of documentation and references, which I include in my book. As reviewers have called it, the book, the case that I make is unassailable.
Okay. And so, what steps I mean need to be taken? I mean, we gotta get rid of the regulators. We need a whole new.
No, I mean, I lay out 14 specific reforms in the book. The immediate reforms are, okay, the need for increased disclosures and transparency in the in the system. More information for the benefit of investors in terms of just investment offerings to drill down, the ability to assess risks. Transparency is the great disinfectant. But ultimately, what are other things that I think that need to happen in order to bring information out? I think we need significant whistleblower protections. There were whistleblowers on Wall Street who were willing to come forth, and I highlight personal stories where these whistleblowers were ignored, intimidated, or fired. Those were whistleblowers both inside the industry as well as within the regulators. I mean, that's just wrong. So I think we should fold the self-regulator into the SEC. And people would say, well, why the hell would you do that? The SEC, is largely incompetent. But I would only do that in concert with what I would define as a financial regulatory review board. Ultimately, what's our problem? We've got a total failure of leadership, both from Washington and Wall Street. And so I think we need to find some, real financial statesmen. Guys like William Black and Bill Isaac and Simon Johnson. Now, again, this may be viewed as a reach, but I put these ideas out there for purposes of debate and discussion. Just let's expose the scandalous behaviors so that we can actually have meaningful discussion.
Okay, so I mean, if we have a potential, another doomsday scenario, and then on the other hand, you have, an accommodated Fed here. I mean, what?
Yep.
Yeah. What do you? I mean, what do you? I
What
mean,
do you do, right?
Yeah. What do you do?
Well, in the short term, I think the Fed is certainly reigning supreme. But how long? How long? I mean, they've got a $4 trillion or $4+ trillion balance sheet. The question now begs, how long can they, continue to maintain that approach? And so clearly they're trying to buy time, kick the can down the road, regain some traction. But what we don't have, the Fed doesn't control, the central banks overseas as well. Clearly, I mean, we're seeing the Bank of Japan, implement a new policy in terms of lending. That just came out last week. So we've got global central banks that are accommodative, but how long? My concern always is leverage. Where's the leverage in the system? So we've got massive, leverage in the central banking system now. But what about some of the shadow banks, especially overseas? A concern that I have is in the shadow banking system over in the People's Republic in China. That represents, I think, last I looked, up 35, maybe 40% of the credit that's going into their economy. Are they taking a page out of our book in terms of lax oversight and regulation? Yeah, I think that maybe our model, our system would look like to be a model, perhaps compared to theirs. So these are kind of the unknowns that I think ultimately impact our markets. I mean, so we'll see.
Okay, now we kind of had a divergence going on here in the gold market. Usually, when you have a rally like we've had a creeper rally off the lows here, usually the money is coming out of the gold market. But in this scenario here, you've had gold and the market, moving up moving up together here. Is this symptomatic of people getting, nervous on an international scale here, or is it just, kind of
Well, in
just
my
a
opinion, now the move, in my opinion, coincided with Miss Yellen coming on board at the Fed, and from a historical standpoint, she's known as a dove. I mean, not that Ben Bernanke is by any means a hawk, but certainly not. But
oh,
Yellen, I think, is always known as dovish, and
right?
I think that the move in gold was directly correlated with her initial testimony and coming on board, and so that's what I think there. But the gold market to me though, it's always tough to get a handle around. It just seems to get that trade seems to get very crowded.
Okay, so you think this ends badly, or just the fact you just kicked the can down the road forever?
Ultimately, the bill comes due, right? And
Right.
so the question is, how quickly and how large does the bill come due? And the issues that we've got are structural in nature, whether it's from a regulatory standpoint or an economic standpoint. And these issues need to be addressed. And we've got this serious slack in the labor market. I mean, clearly Yellen highlighted that. That's what she's looking at. It's not inconceivable that we end up with a 5 to 5.5% unemployment rate, and the Fed's going to continue to remain dovish simply because of the large numbers of people who aren't even in the labor pool
Right.
or in the labor force. So, and this again makes it problematic because how do you determine, okay, what is the Fed going to do? So these are all new challenges. We're in uncharted waters, but I think for the time being, the market's probably okay. But I look, when's the last time that we had actually a formal correction, a 10% pullback? I think it's been approaching close to 2 years now.
Yeah, we had that little one a few weeks ago, or a couple weeks ago, and we bounced
Yeah,
right
I mean,
back.
that was, what, 5% or thereabouts?
Right,
I
right,
don't think we've had a 10% pullback since spring of 2012, I believe.
right.
So that to me seems, I mean, if we're not getting a little long in the tooth, I certainly think that we're approaching it. But, I think that if we were to get a 5% or even a 10% pullback, honestly, it'll probably be met with cash, and that the market will probably move sideways. But ultimately, again, with the Fed tapering, I mean, what happens if by the end of this year, they actually did maintain the program and they're done with it? I mean, I have a hard time believing that the market would be at these current levels if the Fed were to say, you know what,
We're done.
QE, we're done.
Yeah. Okay. And what about just getting a little bit into like marker structure and it's just high frequency trading? Do you pose that as as a threat to this market? I
Oh,
mean,
very, very much so. And it's interesting. A relatively new commissioner at the SEC, a woman by the name of Kara Stein, just last week maybe it was 10 days or so ago, at an equity trading conference, highlighted that the structural issues of the equities markets as an issue that needs to get addressed. I think the SEC ushered in the current structure in the equity markets without a full appreciation as to how they were doing it. And I think the market's structure has raced way ahead of the SEC's capabilities to oversee it. And so now the SEC is trying to play catch up, and that certainly bears watching. In that same talk, Commissioner Stein said, we also need to take a look at Wall Street self-regulator, FINRA. So these are issues that they're not going to be corrected overnight, but this is stuff that I look at very closely because to me it just represents underlying structural issues that present risks that I don't believe people
fully. Yeah.
fully understand or appreciate.
Okay, so like no two crises looks the same, right? You always have
No,
something else, tipping tipping the iceberg. So just what could you've mentioned a couple other things. Is there anything else here that could trigger the next one?
again, it to me it always comes back to leverage. The what do they? As one of my trading friends said, the road to hell is paved with positive carry, and in terms of leverage. So I'm always trying to keep a pulse on where is the excess of leverage. Now, okay, we're not going to get a central bank to quickly pull the plug, but as they slow down, and that's why I look at leverage in the dark corners of the market. And I think that China, especially, it's tough to get a look in there because I don't see a tremendous amount of significant research into that space, but the little bit that I do see, it's like, this looks to be kind of problematic. And if you got some hiccups there, and you get, we had a whiff of some dislocations in EM. No, to those who are trading those markets, it was more than a whiff. I mean, that was pretty painful. But if you get a concerted exit from selected emerging markets, I mean, there's nothing the Federal Reserve can do.
Okay, all right. We've had Larry Doyle on, managing partner at DM Incan Advisors, author of his blog Sense on Sense, and also his book for us conspiracy theorists out there, In Bed with Wall Street. Thank you, Larry. It's really good to get a different perspective. We have a lot of traders here looking at daily fluctuations in the market, but it's not often that we put together all the macros and all the different facts that you analyze in your blog, in your books and stuff. Thanks a lot for coming on. I hope you can dig yourself out of that snow, and certainly like to have you back on the show again.
Guys, thanks very much for having me on. Have a great day.
Okay, thanks, Larry.
Appreciate it. Yep, bye-bye.
Mighty Joe Young, are you out there?
I am out here, all back in action after our slight power surge in the office today. Thank you, Larry Doyle, for coming on the show today. That was really cool. And we'll have him on again after his next book comes
He's a
out.
smart guy. Why do
Oh.
we get these smart people on here? I mean, it's like osmosis. I just feel smarter after talking to these guys.
You absorb their knowledge, you feel?
Yes, I
And
do.
it's recorded, so you can go back and replay it over and over again. But yeah, Larry is a pretty cool guy, and I'm on the conspiracy theory board of directors, if you will. I'm all about the conspiracy. I think it's just absolutely fascinating. So, moving into today's headlines from around the globe, Sochi medal count update. Germany leads the way with gold medals with a total of 8, followed by Norway's 7 gold medals. Russia and the U.S. are tied for total medals with 19 apiece, followed by Norway with 18, the Netherlands with 17, and Canada with 16. Sorry about that, Dennis. Activists agreed to acquire rival drug maker Forest Laboratories in a cash and stock deal that values Forest at about $25 billion. The proposed combination of Dublin-based Actavis? Yeah, nobody's on. And Forest of New York is partly designed to position the resulting company to deal with the changing healthcare landscape in the U.S. hospitals, insurers, and doctors. In the U.S., hospitals, insurers, and doctors in the country are combining to make larger organizations that can negotiate directly to buy prescription drugs. A combined Actavis Forest could offer a range of generic and brand name medicines, reaping economies of scale of its own. Forest had a market capitalization of 19.3 billion as of Friday's close, compared to 33.4 billion for Actavis. The company that brought the world the addictive puzzle game Candy Crush Saga is hoping that investors will line up for a piece of its stock as well. King Digital Entertainment, which has headquarters in Dublin but has offices across Europe and in San Francisco, filed on Tuesday for an initial public offering in the United States. But prospective investors may be wary that players may be tiring of paying to line up shiny virtual pieces of sugar. While King's preliminary prospectus gave a preliminary $500 million fundraising target to determine registration fees, the company is expected to seek a multi-billion-dollar valuation. The rise of the nearly 11-year-old King, built largely on the huge success of Candy Crush, has had many analysts and prospective investors eagerly awaiting an IPO. The company said that its profits surged more than 7,000% last year to $567.6 million from $7.8 million, I'm assuming, the year before. Revenues climbed tenfold to nearly $1.9 billion. In its filing, the game maker disclosed that it has 128 million daily active users, some of whom spend big amounts of money to buy lives or special tools. 93 million users a day. It remains the second highest grossing app on Apple's App Store as of Tuesday, behind Clash of Clans. Maurice Hank Greenberg's Star Investment agreed to buy Multiplan, which manages insurance claims on behalf of large insurers from two private equity firms. Star teamed up with Partners Group AG of Switzerland to purchase Multiplan from BC Partners Limited and Silver Lake Management, the firm said in a statement today. The purchase price is about $4.4 billion, according to two people with knowledge of the transaction who asked not to be identified because they weren't authorized to speak publicly. The two private equity firms purchased Multiplan for about 2.5 billion euros or 3.4 billion US dollars in 2010. Officials at Star and Multiplan didn't immediately return calls seeking comment. Sony on Tuesday announced it hit its internal PlayStation 4 sales goal well ahead of target, with the company having sold over 5.3 million new console units since launch by February 8. PS4 sales data has been collected from North and Latin America, Europe, and Asia. Sony will launch the PS4 on February 22nd in Japan. President Barack Obama on Tuesday will direct two federal agencies to set new fuel efficiency standards for medium and heavy-duty trucks by 2016. Obama will appear at an event with the Transportation Secretary Anthony Fox and Environmental Protection Administrator Gina McCarthy at the Safeway Distribution Center in Upper Marlboro, Maryland, just outside of Washington. He will use the event to highlight the hidden costs in groceries and other consumer goods that are hauled in trucks that could be much more fuel efficient. The White House said the president will set a timetable for new rules. The National Highway Traffic Safety Administration and EPA are to unveil a proposed new round of higher truck efficiency requirements by 2015 and a final rule by March 2016. The new rules will start with the 2019 model year and last well into the next decade, the White House said. With Samsung expected to unveil its new Galaxy S5 next week, Sam Mobile has released a report saying it's confirmed that the new device will come with a fingerprint sensor to unlock the smartphone. According to Sam Mobile, people familiar with the upcoming device said the fingerprint sensor works with a vertical swipe of the pad of the finger while keeping the finger flat and swiping at medium speed. Contrary to earlier rumors that said Samsung will use the Galaxy S5's entire screen as one giant fingerprint sensor, Sam Mobile said the sensor will instead be built into the smartphone's home button, similar to Apple's iPhone 5S. Besides using the fingerprint sensor to unlock the phone, users should also be able to register 7 other fingerprints and assign them to various tasks or app shortcuts, according to Sam Mobile. Apparently, other security methods like a PIN code will also be available on the Galaxy S5. I'm very excited about this next bit of news. I saw this over the weekend. Nike will introduce self-tying power laces as worn by Marty McFly in Back to the Future Part 2. In the 1989 movie, the power laces became a reality in 2015. Sure enough, next year is when Nike will unveil the laces, confirmed by Nike designer Tinker Hatfield to Soul Collector, a site dedicated to sneaker culture. Drew, I hope you're listening. Drew's our resident sneaker. He's a sneaker fetish.
Let's see,
actually.
CSO, Chief Sneaker Officer.
CSO, Chief Sneaker Officer. That's right. He loves them so much he still wears them in the winter, despite how impractical they are. The power laces worn by McFly automatically lace up once he slips his feet into the high-top sneakers. It's unclear if the power laces will be introduced with the Nike Air MAG. Nike,
you know what they say, Joe?
What do they say?
The future is now. Do they say that?
I haven't finished yet. I'll let you know.
Okay.
Nike introduced the MAG in 2011 as an exact replica of the high-top sneakers worn by McFly, but without power laces. Disappointing. The MAG illuminated by pinching the ear of the high top and glowed for 5 hours per charge. Nike auctioned 1,500 pairs of the MAG for the Michael J. Fox Foundation for Parkinson's research. Sorry, I didn't see the futures now, but the future's now. It's actually next year, though, because that's when the shoes will be out. What can a $10 million gift to Michigan get you? naming rights and endowment for the head football coach. If approved by the University of Michigan Regents at Thursday's meeting, Brady Hoke's official title will be the J. Ira and Nikki Harris family head football coach, effective March 1st. This is the first endowed coaching position at Michigan, but not the first nationally. Stanford, Vanderbilt, Boston College, and Northwestern have endowed positions, as do most Ivy League schools. At Stanford, for instance, an anonymous donor endowed the offensive coordinator's position, so it would be called the Andrew Luck Directorship of Offense, my bad, to honor the former quarterback. Offense.
I was
Where's your defense, Jake?
I was at a event where David Brandon was speaking, the Michigan athletic director, and someone asked him how much money they would have to donate to be embalmed at the tunnel at Michigan Stadium after they passed away. I th- I think he came out with a price. I can't remember what it was though.
A lot. I bet it was a lot.
I want my ashes spread over Michigan like during a halftime game or something. Even though it's not according to my religion. No, that's the way I'm going out.
No, Joel. Sorry, you're in the ground tomorrow. No buts about it. Unless you have tattoos, then they just dump you out back. All right. Let's see here. I'm skipping today's trivia tidbit because we're getting too close to the opening bell.
Oh,
Brent, are you out there somewhere?
I'm out here
We're
somewhere.
30 seconds away from the 25
What?
seconds away from the
Holy
opening
cow!
bell.
I'm never gonna be able to do the rating changes as quickly.
Oh, nuts and bolts.
so let's hear from our people in the chat room here to see if there's any specific issues that you're looking to buy, sell, or hold here going into the open S&P.
Ding 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 ding.
Ding, 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 ding here. Boy, it was like a 3-day weekend, but holy smokes, man. We're kind of still working out the cobwebs here on the desk, aren't we here?
Maybe.
Yeah, well, let's see if our traders are back. And I know Altros is in the room yesterday, just
Raring to
ready-
go.
Yeah, I
He
mean,
was like, "Where are they at?"
yeah, maybe he should have played some of the recordings or something to get a preview. But S&P futures popping up here. Really jumped off settlement a few times here at the close. So 38.75 was Friday's high. That's an early parameter to look at. We have hit 37.75. So all is well. Brett, you got any earth-shattering news here for our traders?
Let me see. I mean, that's a nice move higher we had over the last hour or so, but besides that 8:30 data that sent us lower, I'm not seeing anything at the open.
Okay, let's see here. Good old violin maker is Regeneron here. Let's see what's going on in this stock here. REGN. Stock here is popping up. Not much trading in the pre-market here. 327.01. We rallied off the open here. Opening print 324.69. So kind of open unchanged here. Rallying first. Really, there's only two resistance points here. 328.99 was your high from Friday, and then I believe that's the all-time high that you have at 331.64. GGB pointed out ANIP here, and I did not check my news at all here because obviously there's some kind of huge news taking this thing up. I don't know if it's a merger or whatever, but opened up 23.10, opened up flat, and it's off to the races here. Had been consolidating above 22 here. Just 2 points to keep an eye on here. 25.43 was your high in the 22nd, and then also you have the not the all-time high, but you have a recent high at 25.75 for ANI Pharmaceuticals here. Maybe this is something. Maybe they're similar to the Force Labs or whatever. Maybe someone may be looking at them. So that's what we're looking at. DJ here, he's popping in with a long one here, and talking about new banking regulations established by the Treasury Department that allows banks to do business with licensed marijuana sellers deemed to be obeying the laws. Holy smokes here.
Yep.
adding credibility here to the green
That's
sector.
kind of the idea. And though you've seen those marijuana stocks just ripping on Friday, Medbox up 27% almost. Let me check a few of these other that DJ's got listed. We had CANN up 28 plus percent. What's another good one? AVTC, that one was up, let's see, about 15.5%. Huge move in those names to end last week's trading session.
Well, I guess the thing that you want to look on this too. I mean, obviously, if they're loosening up the banking regulations, perhaps this is a little bit of a precursor to maybe lifting the laws on a federal basis. I mean, right now these stocks are appreciating with only two states being proved. So boom, 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 you get things going. And then we also had Alan talk about the potential in Canada, the Creative Edge solutions. What was the symbol of that stock? Do you remember that? I know Dennis is gonna pop in here. I was just wondering that had the initial move.
Is that the one that was related to Full Circle?
Uh,
Do you remember that? I
no,
can't remember.
I think I remember what it was. I think it was FITX.
FITX.
Yep. They were supposedly, well, that's continued the move here, so we'll see what happens in that sector. But that's certainly interesting news, DJ. Thank you. Thank you for bringing that to our attention here. Uh, Tesla got the move. I'm not sure about the whole Tim Cook Elon Musk meeting here. Hit 208 in the pre-market. Opened up at its high, so people are a little bit skeptical. But coming into the old triple top you had right around the 202 area. So if you were shorting that Tesla off the open, it is coming back to those old highs there. So keep an eye on this 202 level. If not, we perhaps slip down to the all-time high close, I believe, which is 199.53.
Joel, the report said it was Apple's head of, I believe, product development.
Or was it merger and acquisitions?
It was not. It was not Tim Cook. It was Adrian Perica.
Oh,
And according to the report, they met last spring. So this is not anything that was like,
okay.
yeah, I didn't mean to disappoint you like that, but I had to do it.
Yeah, it's funny, man. They use it what they want to, right? And juice it up and get the stock up. Apple's at an interesting level too for you Apple traders out there. We've come back all the way since filled the gap here from the earnings that they weren't too happy with. Mr. Icon and the company loading up again at the $500 level. Did take out Friday's high, which is 545.98. Got the 545.08. I'm still keeping an eye though. This entire 545 level opened up there. Like to see Apple just continue this move up, get back above 550 here, but you are getting into a bunch of lows that you had just before earnings were released. Well, is that time for some Jake obscure stocks to take a look at?
I believe it is, actually. I do believe it is. Well, Joel, I guess it was actually kind of a rough weekend for both of our teams. Michigan and Michigan State dropping games. I guess you guys dropped a better game, but by a higher margin than we did. We just blew it. I don't know what else to say for our game, but wow.
Do you want my dark horse? My dark horse NCAA tournament pool?
Who do you think it is?
Wisconsin.
See, I'm really more confident in Iowa. I think Iowa's gonna light up the tournament.
Okay.
I don't know. It should be interesting. The Big Ten just seems to keep surprising absolutely everyone out there. But moving back to more stock-related things, I guess you guys were just talking about Tesla, correct? You picked up that price target bump from Baird this morning. That is just on a rip. I mean, hit 208. Was that high? Is in the 208s this morning. I know it kind of pulled back from there, but making those all-time highs. Does report earnings tomorrow, so I think that was kind of interesting. I always love it when an analyst decides to either upgrade or bump a price target right ahead of earnings. That interests me quite a bit because that means that they really do believe something's going on. Now, there has been some serious price action the last week, and their previous price target was $187, so they were a little bit off with that price target, but It was just a month ago that they posted that outperform rating, and now they're bumping their price target up right ahead of earnings. So they are staying
What
really
if you already
bullish.
sold at 187?
I don't know. I guess they say buy more now. I guess the report was focusing that they kind of were moving up their EPS estimate for the quarter. They think it's going to do 21 cents a share, but they think it could do as high as 25 cents. Although they think that all the supercharger stations that the company built might kind of draw it down a bit. They also focused. They want to hear what Tesla says about their battery production lines, since that seems to be kind of the choke point for production. And they also want to see if the company maybe announces a second production line at its facility. That's I don't know. That's just something we want to kind of take a look at, and did interest me. I know we've gotten some interesting price action in that. So that was Tesla for anyone just joining us right now. Now here's another one. This one could be interesting for you. It's iRobot. This stock has been making fresh 52-week highs multiple times last week and is doing it again this week. India, Romeo, Bravo, Tango is the ticker there. It's not a whole lot of news. Just kind of broke out last week, and looks like technical bulls are hopping in on this one. Joel, what do you think of this name?
What do they? What do they do?
So you know the Roomba vacuum cleaners. That's probably their most known thing. It's those little automated vacuums that you turn on and they drive around your floor. You always get those those videos of cats jumping up on top of them and sitting on them as they drive them around the room. I can imagine that things would get really annoying as they start bumping into walls and getting trapped in things. But it's kind of a cool idea. They also do make military drones, police drones. A few other things, but it's basically all robotics is what they're doing. So I know that they got a little bit of a boost when Google purchased Boston Dynamics a while back, and so this whole craze of more automated in robotics names are kind
Automatic vacuum cleaners.
yeah.
Okay.
In this case, that's their consumer-facing product. Yeah.
Made a high last week, all-time high, 46.99 on Friday. Settled 45.58. Opened up at its high, missed it by 2 ticks. Sold off to 43.31. So what I'd be looking at here, you got a little bit of a pullback. You got Friday's low here at 43 even, 43.31 the session. I'd kind of like to see it come back down to that 43.30 area, then perhaps use a lower risk entry, leaning on that 43. Below 43, I don't like the way it looks, but you still have to respect that 43 low from the Friday.
Looking at some of the other movers from this morning, Coca-Cola did report earnings.
Oh,
and
yeah.
I figure we should probably hop into that. They are down 3% right now. I'll grab you the data from that report real quick. But yeah, Coca-Cola did not impress the street with that report. They did match on the bottom line. Let me get the exact numbers. It was 46 cents, which came in right in line, but revenues were thin, 11.04 billion versus expected 11.33 billion. I know what a lot of traders were worried about was carbonated beverage sales, to see if that specifically is going down. I know some of their other segments have been kind of buoying their numbers, but that's kind of what the worry was there, because that seems to be a continual contraction point for the company. But definitely interesting to watch here. Missing on the top line, but matching on the bottom there. Coca-Cola just not really impressing the street.
No, this is opened up at 37.98. Barely stuck its head above the $38 level. 38.11. Now you're crashing through all kinds of support here. Couple levels to keep an eye on here in the issue. We are only 13 cents away from 37.38. That was low on February 5th. And then backing that up, 37.21 and 37.10. So call that hole that 37 and a quarter area major support here for Coca-Cola, and just see what happens to see if this is bad enough to drag Pepsi to 78. No, it's not bad enough, but 78.10, that opened up at its high of the day. A lot of times when you see a stock coming down like on support, it keeps holding at that area and not bouncing out of it here. Today's the day. 78.06 was Friday's low on Pepsi. 78.10 so far in today's session.
Well, in other earnings news, Waste Management shares are getting absolutely trashed in the pre-market here. Sorry about that. That was rough.
We do that all the time.
Yeah, yeah, yeah. Whiskey Mike is the ticker there. EPS came in at 56 cents, missing the expectations of 60 cents, while revenues came in at 3.5 billion, missing those expectations of 3.58 billion. So just not impressing the street here, and it looks like they're kind of coming down. Taking a look at that, $42 level, maybe testing that. They did give us some guidance today. Their fiscal year 2014 guiding from 230 to 235. Street was looking for 238, so not hugely off as far as guidance goes. It wasn't like a huge miss or anything, but it is lower, and they did miss on the report. So overall, just not exactly what the street was looking for. Trading down was about 3.6% or so right now.
Yeah, the open 42.69 got a little bit of a pop. If you're hoping to get out, scratch its settlement, missed that by 22 cents, and then reverse course here, just trading 6 cents off the low of the day, 42.06. We did hit 41.50 in the pre-market trading. 41.50 low. Now, if you go to your daily charts and take a look, you had a low at 41.39 here. So under the $42 level, let's keep an eye on 41.39 to 41.50. Let's take a look here. Also for Morganomics here has been popping in. He's looking interesting. Ooh, boy, he's 50 cents from being out of the money here in these calls. Holding some that are about 50 cents are going in the money. So you got the 50 calls here. Crude's making a nice rally here. Boy, oh boy, oh boy. I mean, this has been gap and go, gap and go. I guess you got a week on this one, but that 50 is a huge level. British Petroleum has not seen 50 for quite some time here. Actually, before that big spill, it had a high of 52 back in May of 2010. Battled back almost to the $50 level. 49.50 was your high back in July of 2011 here. So coming into some major resistance here. Might be a little bit tough to get those calls in the money.
Well, it's hard to believe, but we're already towards the end of the show right now. S&P is up, Dow is up, Nasdaq is up, gold is up, crude oil is up, even the Euro-US dollar is up. The only thing down right now seems to be the 10-year bond. Joel, what are you thinking of the S&Ps for today's session?
I think the S&Ps here are rallying. We are trading at Friday's high, which was 38.75. We've hit 39 in the session. I'd like to see us get over this hurdle here at 11.39. That high, get above there, clear the pre-market high at 18.40 and a quarter, and then you got the major resistance up at that 18.44 to 18.46.75, which was the all-time high. But I'd like to see it get going out of here pretty quickly. The support did hold at the close at 18.35.50. If we hold our average range here from this area, that 18.31.75 low, that would take us right back in the area of the all-time highs. So trying to get over Friday's high here. Just real quickly for Jared, he must not have went to work today because his FCEL, his penny stock is moving for him. Broke out of the double top 163, 164. I got to 168 here. Just keep an eye. Jared had a couple highs back in middle of January at 171 and 173. So, okay, folks, thanks for being part of Benzinga's pre-market prep, brought to you by Options House. Make sure you get those 150 free trades, and we'll be back with you tomorrow.